So, first of all, thank you, Nutshell and Asfar Hassan Saab for providing this opportunity of interacting with such a important audience here. You referred in your introduction about the top companies, top 25 companies, and your question about the rent seeking. I believe those companies which have qualified, there are 4 sectors which in fact are dominating in top 25 companies list. One is E&P, number 2 is power sector, and number 3 is fertilizer, and number 4 is banking sector. So you see the first 3 mainly are having a dollar-based revenues and returns. And because of the recent devaluation of Pakistani rupee, they have been the beneficiary of that, and in terms of rupee, their revenues have substantially improved. And I think if we take E&P, E&P has the pricing mechanism with international market, you see. So when the international market moves in that direction, their products are in fact priced in. And in few instances, when the energy prices goes very high, then their correlation is not that high. As far as the energy sector is concerned, again, they have the dollar-based guaranteed return, and on that basis, but still, a lot of investors see the risk in that, and they have the problems of getting their payments on the time. The fertilizer sector, in fact, there is a misperception that there is a subsidy on it. There is no subsidy on it. You see that they are being provided a lower price gas, but their local pricing is much lower than the international market. So generally, we when calculate the farmers, in fact, are getting the fertilizer at a lower price in comparison to international market. For example, presently the urea bag price internationally is about 7,000 rupees per bag, whereas now the price, in fact, has increased to 3,700, 3,600. It used to be 2,500. So 1/3 of the international price, the urea was being sold in Pakistan. So out of that 2/3 price differential, the gas price impact was only 1/3 of that. 2/3 was being borne by the fertilizer companies. So again, there was no subsidy to the fertilizer companies. Yes, the farmers are being provided urea at a lower price, mainly because of the food security consideration. The banks, in fact, have the beneficiary because of the high inflation in Pakistan and high interest rate, and because of that, their margins, in fact, have increased, and they are making good money out of it. And mainly because of the weak economic conditions of the country, in fact, the government has been the biggest borrower, and that biggest borrower is the main reason that they put most of their money into that. As far as the availability of funds for the private sector is concerned, I don't see any issue in that. There are not sufficient takers of the loan in Pakistan, mainly because of the high cost of energy here, high interest rate, and high in fact, taxation rate. So there are 3 major big problem in Pakistan economy, and because of that, I think there is very, very slim chances of, in fact, attracting investment from outside Pakistan, mainly because of these 3 negative factors. Unless we, in fact, address these factors, and to me, I believe that this will be possible if the interest rates go down. They go down because presently the 22% policy rate, I think, is not, in fact, affordable. Is not affordable, and it's killing for government financing itself. And I believe that in a period of about 1 to 1.5 years, I think that this policy rate would come down to 12%. And if the 10% reduction in the policy rate would save Pakistan about 3 trillion rupees. And that 3 trillion, I believe, I would suggest, would be spent in fact, reducing the tax rate here. That will definitely be contributing to the lower interest rate, would help the businesses. But the energy also being in fact priced in such a way that our exports become competitive regionally. So with these three negatives, it would be very, very difficult to improve in the industrial exports. As far as the IT is concerned, yes, there is a lot of scope there, and we have the raw material, we have the human resource there, and we can then galvanize them and in fact train them and use them for improving our exports in IT. Agriculture, yes, I think agriculture is the area which can in fact has a short time of turnaround time, and there I think Pakistan has a lot of scope. The import substitution would also be, and then we can also produce surplus for export.
Thank you, Arif Bhai.